another panel session featuring leaders from Malaysia's top government-linked investment companies. They will discuss the Ministry of Finance's new Gear Up initiative designed to accelerate economic growth by fostering innovation, increasing productivity, and enhancing competitiveness across key sectors. Now, let's welcome to the stage Dato Muhammad Umar Swift, Chief Executive Officer of Bursa Malaysia. He's already on stage. Mr. Ahmad Zulqarnian On, Chief Executive Officer, Employees Provident Fund. Dato Amirul Feisal Wang Zahir, Managing Director of Khazanah Nasional. Dato Hajah Nik Amlizan Mohammad, Chief Executive Officer of Kumpulan Wang Persaraan, and Mr. Mohammad Ashraf Muhammad Radzi, Chief Executive Officer of Lembaga Tabung Angkatan Tentera. This conversation will be moderated by Dato Muhammad Umar Swift. Over to you, Dato Umar.
Thank you. Oh, we'll have another frank and interactive session. Thank you, Mr. Lee. Firstly, thank you everyone for joining us today. My panel needs no introduction, so we'll jump straight into it. As I reach for my copious notes, fear not, dear panelists. Conversation. And this is an interesting conversation. It's going to be around FDI, DDI, keeping the growth momentum. As an exchange, we're very interested in where the business is coming from, so to speak, where the alpha will be, where we'll see the growth. Now, Malaysia is having what we would call a purple patch. We've had very strong growth first 6 months. Momentum is carrying on to the third quarter. We've seen tremendous flows into the market. Thank you for onboarding investments coming to the equity market, but we're also growing for the future. And we've seen the announcement just recently, 6 GLCs or 6 GLICs have pledged 120 billion domestic direct investment. Now, we won't benefit, if you like, immediately, but it has spin-off benefits for the market overall, as well as all investors and all of us in our respective funds that you are the custodians of. Now, I thought a great way to open up the conversation would be perhaps not picking anyone, the gentleman with the largest checkbook, perhaps, and then we'll move left to right or right to left, as the case may be. Now, each of you have adopted or have a pillar of growth, if I may. And we have this, we've had a conversation, there's 120 billion that will be invested in the domestic economy, which will grow our economy. But from a, if you like, from a unit holder perspective or from your own challenges, what specific high growth, high value sectors are each of you targeting in a little bit of colour and the thought processes that you go on and perhaps some of the successes you've had in the past? Now, I know, so you're looking at health, which I think is extremely interesting, but if you could elaborate a little bit, please.
Sure, thank you. Thank you, Dato Umar. Thank you for having EPF here. So I'm sure everyone would have seen the Gear Up initiative, which is the 6 GLICs, 4 of which are on stage today. And some very large headline numbers have been reported. And one of the numbers is 120 billion by the 6 GLICs investing directly into Malaysia as part of a domestic investment program spread over 5 years. So those are the years 24 until 2028. For the EPF, we're a portion of that 120. And what we are doing is essentially reallocating some of the asset allocation that already is domestic from fixed income into direct investments. And the EPF is really how we think about it is a capital allocator. We provide capital for businesses. We provide capital for governments. We provide capital for governments through the purchase of government securities. We provide capital to businesses through participating in IPOs. through buying sukuk and bonds. And in those two realms, we've been doing it for many years, and we've been doing it relatively successfully domestically. When we move into the world of private equity or illiquid assets, the EPF started doing this roughly about 2 decades ago, a little bit short of 2 decades ago. So we have quite a number of experience in doing this. It has always been an international outside Malaysia game. And it's been a very successful investment program in private equity, in infrastructure, and into real estate. What we're doing now is taking the learnings from that and then applying it to investing in Malaysia. And we're going to stick to our knitting in terms of where we know these asset or asset classes best. That will be in infrastructure, that will be in real estate, and it will be in private equity in certain sectors as well. When we look at sectors that we like, looking at, and we're a generational investor, we can take very long-term views on industries and on assets. The one that comes up, however you look at it, is really healthcare. So healthcare, when you look at demographic profile of Malaysia and where we are in the continuum of economic growth, and that we are in fact becoming an aging society, we do believe that healthcare is one of the industries that will have a 20-year tailwind behind it. And healthcare in Malaysia is also profitable. It is a good asset class. It has high return on equity. So you can see in many of some of the private publicly listed companies, but if you dive into the private companies today as well, the return on equity on healthcare is relatively high. Now there is a dark side to that, which is medical inflation. So I think from a policymaker standpoint, we need to balance that out. But it is a sector that is very attractive from an investment standpoint. And it also dovetails with our mission. And our mission is really to take care of the elderly. So we are a retirement fund. It's about providing replacement income for retirees as they retire. And we also add some other angles to that, which is how do we keep people healthy as well? Because keeping people healthy actually reduces their medical costs, and keeping people healthy also then extends how long the retirement funds will last for an individual. So that's how we think about it.
Thanks, Zul. I mean, that whole pivot from, if you like, cure to prevention is very interesting. Feisal.
Thanks. Thanks for inviting me, Umar. So what are we investing in? And then I guess we'll talk about domestic investment, DDI, and maybe examples of what we did in the past. Now, I think for Khazanah, and you know, when you look at Gear Up, I guess the beauty of it is we're all in different parts of the risk spectrum. You've heard EPF and you hear the other fellow GLICs. We're pretty much in different parts of the risk spectrum, and some of us are actually quite similar. For us and Quad, for example, are owned by the government. And because we're different parts of the risk spectrum, we can then spend our effort on our sweet spot. Khazanah, for example, can take on more risk, and therefore early stage investments, investments where I guess typically somebody has to do it first to really catalyze the area. And that's something that we do participate in. Okay, and that's what generally, you know, how we kind of like split our missions, so to speak. Now, in terms of what we invest in, I think comes back to, and I'd use your Zul's point there, which is the mission that we have. And our mission it's really about the development of the nation, advancing Malaysia. Now, in doing so, there's a couple of things that we are focused on. The first is, you know, if let's take economy Madani. You know, that's actually a good framework where we can all, you know, think our mind on. Now, Malaysia in general, if you look at the companies that we have, what's listed on the stock exchange, they give good yields. But if you track the productivity levels of the companies that we have, it's actually lagging quite a bit. Innovation is also lagging quite a bit. And that's something that we see, you know, if you're an investor in the markets here, yield. If you're a yield player, it's fine, but you want to see some growth. You want to see some aspects of it. So that's an area that we, as Khazanah, would like to see more of. And how we do that is really to look at the whole ecosystem. I mean, we have this thing what we call like a nation that creates. We want to make sure that we actually infuse or try to help productivity and innovation amongst all the companies. So first would be the early stage, the VC ecosystem. I think you've heard that we just completed the merger of MAVCAP and Penjana Capital, and we will be launching programs there. It's a national fund of funds, in case some of you don't know, a bit like Vertex in Singapore. So again, it's looking at the GPs in the VC ecosystem, fund them so we have a better, robust ecosystem in that segment. The other thing that we do look at here is along the chain is mid-tier companies. Now, about 2% of registered businesses in Malaysia make up 40% of GDPs. And these are companies which are either, they haven't been listed yet, or they can be listed. Some of them are, entrepreneur-owned, but they're very comfortable. They're very, very comfortable, very wealthy. Why do I have to work harder, so to speak, in order to grow bigger? But potentially these companies could be ones where it can be performing in a global platform, globally competitive. So we will be launching some programs where we will try to see how we can actually find these companies, entice them, and even fund them as well for their growth opportunity. And funding can be through equity, it can be through private credit. And that's a program that we are looking at. Another segment when it comes to innovation would be semiconductors. So we brought all the GLICs over to Penang, meet something like 19 companies, the foreign MNCs, the locals, the universities, the local players, and we did look at that. And what is it that we can do in order to play a role? So here's a part where each of the GLICs will be looking at how they can participate. I think on our part, we are bringing in, we are speaking to a number of GPs, international, local, in order to invest in companies so we give them the big boost. Most of our industry in Penang, for example, tends to be OSAT, which is assembly and testing. But when you look at packaging, the industry is changing, and we're looking at advanced packaging. We want to make sure that the companies are well equipped in terms of upgrading themselves or including themselves into the supply chain for advanced packaging. And this is where we actually go and work with the GPs for that. Now, there's a lot of things that we are doing, and you mentioned pillars. I think Khazanah is a bit unique because we have so many, right? There's enablers in order to make this work, and enablers are connectivity, energy transition, and digital, and that relates to airlines, airports, energy transition, as well as digital as well. And those are the things that we will be investing in as well. Yeah. One thing. What did we do in the past? Okay. I just want to mention something, what we did in the past, when it can demonstrate how we provided capital. We started something which perhaps other people wouldn't want to do first. And that is this very hall that you're in today, Iskandar, Malaysia. In 2006, a lot of this was just, it was just greenery. There was nothing here. And through partnership with the government, who built the infrastructure, utilities, roads, etc. And through that, of course, we invested. We had the Madini, we were IMS. There's so many things that we invested, and we brought in partners, including Sunway. And I mean, look at what was here around you. This is something where we do have that patient capital, where you do see real growth opportunity. Now, you heard Irda mentioning about half, 400 billion worth of committed investments already in this area. We ourselves, Khazanah, we spent about 7 billion. But through that early stage 7 billion, that actually gained the so-called 400 billion of commitment later on.
Thanks, Feisal. Nick?
Thank you, Dato Umar. Thank you, organizers, for having Co-op here to be part of this esteemed panelists today. Co-op, as you all know, is relatively a young organization. Our fund size currently, at the end of last year, was less than 170. Currently, it's in excess of 185 billion. And we started out being in a public market space only. And over the years, we know that we need to diversify. As part of diversification strategy, we need to move into the private market space. When you talk about private market, I think Dato Feisal just now mentioned, the private equity, the infrastructure, as well as real estate. So starting from basically nothing, so we had to build. What we realized is that it cannot be a one-off. In a private market, you can't deploy capital in a one-off, otherwise your performance will be inundated with the J-curve effect, i.e. you are in the investment stage for so long that it's quite difficult for you to get back to the baseline. So what we did was we created a program, to make sure that when we do the deployment, when we do investments, it's done in a staggered, in a very structured manner to allow the J-curve to be addressed on its own so that it will become a lot more sustainable. Just to share, currently our exposure to the private market is in excess of 12%, including commitment is in excess of another 5% there, so 17%. Our target is to go closer to the 29% going forward. And Gear Up, part of the Gear Up, we have committed 40 billion ringgit in the domestic private market over the next 5 years. And the 2 funds that we have launched are part of this Gear Up program. The first one that was launched in September last year, we have deployed 175 million. Actually, out of the 500 million, which is Dana Perintis, half of it is for the funds, VC funds, the other half is for direct investments. So we have done 2 funds and 2 direct. And I think over the next few days, we're going to make one more announcement for the fund. So it will go, hopefully, inshallah, in excess of 200 million ringgit soon. So we intend to deploy the full 500 million, hopefully, by the end of next year. And recently, we have also announced that, of course, PMX have announced the Dana Pemacu, 6 billion ringgit. Half of it is for Sharia, private market funds as well. This one will be under SMA, and the other half is conventional. We hope to make the announcement and to conclude the deployment, because it's under SMA, by the end of this year. The big difference between for Dana Pemacu would be the way that it's deployed, because what we want is to get the reach to be there on the ground. And obviously for the teams inside, at least for Co-op, we don't have such a large team. So for us to get that reach and deployment to be efficient and to be targeted, we do it via the general partners, obviously. And these general partners, it's actually a GP structure whereby we take the big global names, 12 of them, and we partner with 24 or 12 pairs of local talents. So we hope to make the announcement by the end of this year. So the areas that they're going to be focusing on, there are 8 verticals that Co-op have identified. Amongst them, for example, I think the civil economy, the food security. So we have identified for Gear Up program, the 2 items that we are championing is, number 1, nurturing the entrepreneurs via the platform of Dana Perintis and Dana Pemacu. The second one would be for the food security side, via the agri-tech. I think right now, quite a number of investments that we have done is actually on the downstream side. So we are looking at how we can move towards the upstream and see whether or not there's any areas that we can assist there. So we welcome any expertise out there who can assist Co-op in our journey. And last but not least, of course, a matter that's very close to our heart, which is the civil economy, to address the aging population that Malaysia is facing, and in fact the whole world is facing currently. So those will be the specific areas of interest that Co-op will be looking at. Maybe I'll stop there for right now.
Thanks, Nick. Ashraf.
Thank you, Dato Umar, for having LTAT here. Assalamualaikum and a very good afternoon to everyone. Now, LTAT is not that young, 52 years old as of today, But I think a bit more uniquely compared to our fellow GLICs, we are a fully domestic fund. And our mandate is quite unique as well, where we are the EPF equivalent only to the armed forces, only to the serving soldiers of the country. And hence, because of that business model, our capital levels are flat each year. Hence, we are in a challenging position to make the assets sweat continuously. So with that, when it comes to the Gear Up initiative, we've taken a somewhat smaller footprint focus, but it's a bit surgical, where we are focusing a little bit more on the pharmaceutical industry, specifically towards supply protection and the protection of domestic supply for biopharmaceuticals, specifically insulin. As we are aware now, the supply domestically is short, as well as vaccines. When it comes to vaccines, all the 9 vaccines under the National Immunization Program are imported. Hence, for us, trying to make an impact to the domestic safety supply, we are looking at starting off with 3 of them that covers the 3 highest volume of production of utilization required. And when it comes to insulin, when our production capacity fully ramps up, we'll be able to produce about 30 million doses annually, which will fully cover the national requirement. So outside of that mandate, because our mandate is specific to take care of the social welfare of the armed forces, a lot of our efforts are targeted within sort of like a captive market to take care of the transition post-service. Hence, the presence of LTAT's strategic investments are within the larger industries within the country that are able to take up or offer some elements of transition employment or business opportunities or entrepreneurial opportunities to the soldiers, since they exit service quite at a young age, around early to mid-40s. So we are fully supporting the initiatives within banking sectors and plantation sectors that are being championed by the other GLICs, where we have the necessary footprint. Thank you.
And Sasha, if I may ask, and anyone can answer, because it's already come through on Slido, and I want to ask the question. 120 billion ringgit, equally distributed. How is it sliced and diced, if I may ask, and if you're able to share?
So of that 120.50 is coming from EPF, so about 10 billion a year over the next 5 years. Now the inevitable question that comes from that is, how do you make sure this works for members? I guess one way to answer that a little bit tongue-in-cheek is I am fully aligned with all of you in that my money is in EPF as well, so I have full interest in making sure that I take care of that money. But I think more seriously, I think it's useful to think of, or to begin to answer that question by talking about actually where are we in the point of history and economic history. So I think it's a very interesting time in history, in the sense that if we dial back to World War II and the end of the Second World War, since then I think we've had 2 distinct phases, and we're moving into a 3rd phase. Call it phase or call it eras, what you will. The first phase is really after the war, period of Cold War, up until 1990, where there was great prosperity, especially in a country like the US, where there was constant tension and a bipolar world, but there was relative peace. Right? So there was relative peace, and growth could happen. And then we moved into a phase after the fall of the Berlin Wall, where a number of ex-communist countries became democracies, at least in name. You had China's ascension to the WTO, or then the GATT framework. And we began a period of 30-year uninterrupted period of globalization from 1990 to 2020. And then COVID happened. And this was unprecedented, right? Huge amounts of growth, billions of people coming out of poverty, and economies all over the world becoming very interlinked with each other. And supply chains become very, very efficient as well, to the point where even when one ship gets stuck in a canal, it throws the entire supply chain of the world out of whack immediately. I think that, or many people think rather, that we're moving into a third phase, where globalization has effectively ended. You have China, China's GDP today is at or already crossing over US GDP. And every time that we have a situation where a rising power, economic output, starts to challenge the economic output of an incumbent power, we will have geopolitical tensions. And if you dial back a couple of thousand years to the Peloponnesian War, it has happened 16 times before this, and this is the 17th time it has happened. And every time that happens, there is tension between great powers. So I think a period of tension between great powers is not going to go away. It's not personality driven. It is history repeating itself. The supply chain issue, and coupled with geopolitical tension, is resulting in people rethinking, where do I allocate my business? Where do I allocate my capital? Where do I even allocate my people today? So I think it's a really interesting time, because for a country like Malaysia, and we are fortunate to be in a very strategic part of the world geographically because of the Straits of Malacca, and we've always been, for many hundreds of years, been at the center of trade flows. We have a real opportunity. It's a real opportunity for us to capitalize on what is a difficult world today. And therefore, and I'm really heartened to see that we're actually starting to do that. Right? So, I mean, I've been a market watcher for a very long time, and as many of you are, I think 2023 and now going to 2024, we're beginning to see a real, gradual, but sustained rise in optimism about Malaysia. And when we talk to people outside of Malaysia, investors who are watching Malaysia, we're beginning to see the same as well, right? So people are actually starting to notice Malaysia. People are saying Malaysia is playing its cards right at this point in time. And this is great, right? So kind of the stars are starting to align about a new phase for Malaysia as well. So I think it's useful to think about it from that point of view, because this is the right time also for an institution like EPF, which has been very successful in the public markets. So we've been very successful in the equity markets, we've been successful in the bond market, we've been successful in the private markets, but internationally less so in Malaysia. The list of domestic investments in private markets in Malaysia for EPF is a very short, and it's not commensurate with the assets under management that we have. So as we think about that, we do think that, and when we look at it from a bottoms-up standpoint, certain sectors like healthcare, renewable energy, industrial and logistics in the real estate space, data centers, various forms of infrastructure, there's actually a real opportunity. There's a real opportunity to deploy capital into assets which have a good and decent return on capital. And that's how we think about it, right? So then we take the knowledge that we have and the strategies of deployment that we have, and in private markets, internationally, we deploy in many ways. We deploy through funds, we deploy through funds of funds, we deploy through co-investments, we also deploy directly where we co-underwrite with other funds, and we're going to repeat that in Malaysia as well. So it's really taking those learnings and applying it here. So from a risk standpoint, that's how we're thinking about it, right? It is not about there's a desire to do so we're going to shift funds, because we do think about it from a macro standpoint. the stars are aligning about Malaysia's potential as an investment destination, and that's being validated. It's not short sneery, right? But when we look at it from a bottom-up standpoint, there are certain sectors and industries that we think are really interesting that have very large demands for capital. Right? And large demands for capital is great for a capital provider like EPF. So, and that's how we think about it.
Well, thanks, Zul. I mean, the real takeaway is it's still driven risk-reward. It's not simply just deploying capital. Feisal, we're having a really interesting chat about Malaysia's growth story and history, not history repeating itself, but circumstances converging. Perhaps if you could share that with the audience.
Yeah, thanks. Thanks, Umar. So what we were talking about here is, there were opportunities in the past which basically formed our economy in a way. And we talked about of course, the 1990s, we were one of the tiger nations, right, in terms of growth. Now that's actually quite interesting, because when you actually look at the backdrop during that period, you had, in the 70s, you had US with high inflation, and Volcker came in and towards the end and slapped interest rates way high up, right? And of course the dollar became very, very strong, if you remember, at the time. And in order to address the strong dollar, I think this is how the US, using their so-called influence in the world, managed to convince Japan and Germany under the Paris Accord in order to appreciate their currency. But that was an environment where Japan at the time then started to look for, it's not so easy for me to sell to the US. Where do I invest? Find other places to invest in, and therefore I invest in Southeast Asia, was a region. And Southeast Asia was then used as a launching pad in order to export elsewhere. Now look at the similarities today. And similarities today, of course, the reasons are different, and the characters could be different, and the reasons are geopolitics. And because of geopolitics, I think Zul mentioned about the Thucydides trap, and how you have a difference in nations and geopolitical tensions are arising. And we see that people are trying to look at changing the supply chain. So it's China +1, China +2. People are talking about Netherlands +1. There's all these things when it comes to chips. And we do see investments. And I have to say that myself, I guess my team, we actually meet so many investors, whether they're funds, whether they're actually operating companies out of China, really looking at investing in this country. It's very real. It's a very real thing. Now, the difference here is, okay, fine, we have serious FDI. By the way, it's not just China. It's also the European funds as well as US funds. Because they're also looking at a launching pad with a 1.4 billion market, right? So you have to access that. And Southeast Asia is actually a very, very interesting market. Now, the challenge for us here is, I don't know how long this window will last, because the 1990s didn't last long. That's one. And the second thing is, how do we ensure that this golden opportunity that this country has, how do we ensure that we don't waste it, and ensure that the companies that come in are deep-rooted into the country, and we create the ecosystem where we also have Malaysian companies also benefiting. I think there was a question in the previous panel about SMEs, etc. How do we ensure that everyone benefits? And this is where we come in. Now, we talked about how much we're investing. We've got, our number is 25 billion. But that also includes our operating companies as well, and the key enablers, right? Now, this is where it's very important. When we look at the semiconductor sectors, we're also investing in, Sunway, by the way, we actually do a JV with Sunway. They brought in 42 for coding, and we're together with them to do 42 Malaysia. And today, apparently, they had a wonderful launching in Iskandar Puteri. This is a peer-to-peer coding where people come in and learn coding for free, right? That's great, right? So we're also looking at talent development, investing as a commercial investor and perhaps as a patient investor in talent development as well. So we're trying to make sure that talent is there to actually sambut, to actually receive the investments that's coming in. Now, for us, talent is important. I'll tell you why. Everyone says, every investor comes in and says, hey, Malaysia, we need talent. You don't have the talent, right? I'll tell you one thing. So when we were in Penang, we spoke to the likes of Infineon and Intel. Actually, they take whatever they have, they work with the universities, and they train them. They have internal training either locally or even in Germany or elsewhere. They don't have a talent problem. A lot of the Malaysian companies, the strong ones, have academies. They also have talent and they train them. The issue here is, what about the rest? What about the smaller MTCs, the mid-tier companies? What about the smaller SMEs? They're the locals. Now we want to help them. I think for FDIs, we want them, yes, we help them to provide that talent, but don't just expect the government to train their staff. They should be training themselves. So all this talent development is actually to ensure that the ecosystem of the Malaysian companies are strong. That's the difference that we're looking at. And making sure that we're targeted in terms of giving opportunities for the Malaysian companies to really capture that growth and kind of like coexist together and benefit together.
Thanks, Feisal. I think I'm just going to interject. There's an interesting question from Slido, and I think I'll clarify it. Each GLIC picked what resonated, right? I mean, this has come through in the conversation, but just for the absence of doubt, I thought I'd ask the question. That you're looking for healthcare made sense, the purpose of EPF, yourself, you're looking for change, and so on and so on. I mean, Ashraf, you're talking about the scalpel nature of investing. That's why you were looking at pharmaceuticals, because you had a good fit, and so on. Yeah, your name? No, the question is, were you given a pillar? Yeah, were you given a pillar, or did you choose your pillar? Now, clearly, in answering the question, our takeaway is you chose your pillars.
I think, to be honest with you, from Khazanah's perspective, we weren't given a particular, we were already doing it. I think that session of Gear Up was to ensure that we don't cannibalize each other, we don't coordinate each other, we don't really...
It's about clarity, right? And so we're not stepping... I mean, it also begs the question, do you think there will be crowding out of other investors?
Maybe I'll take some of that question. I think... from our perspective, it's not to crowd out. The capital that Khazanah provides is unique in a sense, because actually, Iskandar Malaysia is an excellent example. This ballroom, you can see Sunway, right? It's not Khazanah, it's Sunway, their venture. But guess what? We helped start it. We did a JV with them. We're crowding in investment to some of these things. So it's not really a question of crowding out, it's crowding in. Likewise, when we look at investing MTCs, they're already entrepreneurs. We want to see how we can actually boost them. So again, it's not crowding out. Okay.
No, I just want to make that clear. So looking forward, we've been talking about Malaysia's age. Does that change? I mean, sorry, Nick, Ashraf, you're domestic investors. Does it change your investment profile onshore, offshore? I mean, this is a very selfish question from the exchange's perspective, because we want your excess liquidity to come to us.
So from our portfolio standpoint, it will always remain a very balanced, diversified portfolio. So just to share everyone, which is available in our public disclosure, roughly our portfolio is 45% fixed income, high 30s, close to 40s of public equities, and the balance a combination of a little bit of cash to the 2-ish%, and the balance is in illiquid assets, real estate, infrastructure, and private equity. Now, if you look over a 15-year period, what has grown in the pie chart is really the illiquid part. And that is consistent with what's happening all over the world as well. There is a big shift. There are two big trends, or big shifts. One from active management to passive management in public equities, for better or worse, and a big shift from public to private. Right? So private is growing, has grown at a very strong clip, and we believe it will continue to grow at a strong clip. And we know that because when we participate in sort of industry conferences, groupings, There's usually surveys at the beginning of these meetings in terms of all the asset owners, allocators, what are you thinking about from an allocation standpoint over the next 5 years? And as far as I can remember, going back 10, 15 years ago and continuing today, there's a gradual shift from public to private. And we continue to do that. Now, in a world of pensions, actually EPF's allocation to private is relatively low. Right? So the ones that are more aggressive, for example, like the Canadians or sovereign like GIC, they are running at 40% private today, like really high allocation to private. We take a little bit more of a judicious view on that, not because we don't like private, but it is a very big portfolio, and we are a very large domestic investor as well. So if we shift to that degree, the absorptive capacity of the domestic market, it will not be there. So we have to be gradual and judicious in terms of how we manage our allocations. However, I do think that for capital market to be vibrant, the market for corporate control is an integral part of that, right? So takeovers and IPOs are the reverse of each other, and we want both to happen. Because you do want the takeovers to happen because that keeps a bid premium generally in the marketplace, and that lowers the cost of capital for an economy. And you want the primary market to be very open as well, so that companies can raise capital very easily. And I think Malaysia has proven time and time again that it is a market that's ready for business in the IPO market. And 99 Speedmart is a great example of that, right? I think our friends south of here, not very far south of here, are actually very envious about seeing the activity in the marketplace today. So I'm confident that the public market still has a place to play, has a role to play, but I also do believe that private markets are going to grow over time.
Thanks, Zul. Now, Nick, you're looking at the VC ecosystem. I mean, I think there's an interesting conversation about defined funds and defined contribution and defined benefits, but we'll go separately with that. When you look at developing sort of the VC ecosystem or food security, how is QOP looking at your direct domestic investments? How do you make it work, if I can?
As I mentioned just now, out of that 120 billion, we want to deploy 40 billion over the next 5 years successfully. How do you do that if the ecosystem there are gaps within the ecosystem? I give you one example. When we look at the early stage, the seeding and all that, the ticket size is smallish, very, very small. So they quite easily could secure funding. And then, on the other hand, the larger, profitable companies, who can actually secure, funding from the likes of us on this stage, because there's ready income there, there's ready dividend to be paid out, and so forth. What's missing is the middle part. So what we try to address is the gap between the seeding to the Series C. Series C is typically more profitable ones. So that's the gap that we're seeing exist here. One of the funds that we have appointed actually introduced this the flagship founders program in KL. So they have actually invited almost 200 entrepreneurs, to come in onto their platform. So that's the first one, because we do need the funding to come in order for us to make sure that the eventuality, there will be a lot more successful ones coming out of that program. Now, the second one that is actually missing, the missing bit, which is quite a big gap for Malaysia, is the secondary exits. Meaning that in order for investors to recycle capital for whatever needs, they need liquidity. You need the secondary GPs to be around as well. All these, they exist abroad. But when we look at domestic, there are not that many, if any, that exist in Malaysia. So we are bringing all these GPs, targeted GPs, to come and set up shop in KL. I know a couple of them have actually physically set up shop in KL. think the announcement has been made, GP Bullhound. Another one that I just found out 2 weeks ago, Castle Forge, which is the real estate GP. So they have set up shop in KL as well. So we need to have more of these GPs to be on the ground to assist us to close these gaps that exist in the ecosystem. Now, as far as the Dana Pemacu, that is Dana Perintis, under Dana Perintis. As far as the Dana Pemacu is concerned, is basically trying to deploy. Under the SMA program, trying to deploy and let them go out, and reach out. Amazingly, thank you to Khazanah who organized the trip to Penang for the semiconductor trip. What we found is that amazingly, they came in droves in 1970s. And after that, the growth has been rather, it's okay, it's respectable, but it's not strong growth, And we account for 13% of the global, in terms of the supply chain for the back end semicon side. And what we saw was fascinating. They're not growing by 30% in terms of expansion. They're growing by 300%, 3 times the expansion from where they were to where they are currently. And it's happening quite rapidly right now. The other state that we have gone and visited was actually Sarawak, and that is focused very much on the sustainability kind of type of projects. They are actually already attracting some of the foreign capital, the Koreans, the Japanese. So when we went there, always things that we can be, the GLICs can be your partner of choice as far as getting this investment out there, because we need to target our net zero that government has set by 2050. So, and we have a target. KWAP has pledged 20 billion ringgit transition asset by 2030. I have to be on the ground. I have to go and source for this kind of investments for him to do. And I'm very excited to be here in Iskandar today, in JB today. Very excited to see the activities and the programs and the policies that are taking place to bring up the industries, to set the infra in place in order to bring not just expertise but also capital into this zone. So I have said this, I'm going to repeat this. I think we are seeing the reawakening of the tiger. The tiger has been perhaps taking a nap a tiny bit too long. I think our time is now. We are benefiting from China Plus One. We are benefiting from the huge capital that we have on our shore. IIC, I'm the chairman of IIC, Institutional Investors Council, we account for 2.3 trillion ringgit worth of funds. The fund is there, so what are we waiting for? It's just a matter of, okay, do we want to do this? We are doing this. I think the activities are real.
Nick, you'll be co-investing with the GPs, but you'll be looking for full hurdle rate, right? So, you're not compromising your expectation on hurdle rate. It's a bit of a theme coming through Slido, Nick, gentlemen, that you compromise your yield to hit your gear up target. So
it's quite clear for us. Whenever we do investments, that is the headline numbers that you see. Whenever we do investments, it's going to be per investment that we have to put forth. And the targets, the expected target returns and so forth still remains intact. I can share with you. Target return, for example, the private equity will be 15% IR, for example. We have specific targets, our long-term capital market assumptions and so forth, in order for us to meet our 7% target return in the long term. And we remain committed to achieve that. And all of our investment proposals would be required to meet the minimum expected returns that have been set within the risk parameters that have also been set by the board of KWAP. So we're not foregoing anything. I think it's just a matter of putting things together, making sure that we actually nurture the entrepreneurs, we actually put in place the necessary ecosystem to make sure all aspects of the investment value chain are addressed.
Thanks, Nick. Ashraf, pharmaceuticals, your pillar, if you would. How does LTAT explore it? How as you I mean, of course, you've got Farmanyaga. As you grow your other businesses in that space, what may be big to you, may be small to someone else? Do you consolidate? What are your thoughts?
Well, certainly, as a lot of the public is aware, we went through a very painful lesson with the COVID-19 vaccine. But what that has enabled us to do is acquire the skills and the know-how to handle liquids or biopharmaceuticals. Because I think for us, the local market for pharmaceuticals is not really a big one. And in terms of local players, there's just Farmanyaga for us and Duo Pharma and PNB, of which there is an opportunity, and one of the goals within Gear Up is to look at the consolidating the footprint within industries, within segments that is already there within all the GLICs and the GLCs under us, and the opportunity to consolidate our operations, achieve better efficiencies, and become more attractive towards inward investments. And hence why I think where Farmanyaga was and the direction that it's going now will certainly offer a lot of growth potential, tightening of operational efficiencies and consolidation. With that, I mean, that has what we have been pursuing under LTAT as a whole, started by Datuk Nick back in 2018. We have been recalibrating our portfolio, readjusting our asset classes. And when it comes to private equity, for example, we have been the home ever since the 70s for the traditional inward direct investment. We have partnerships with the likes of Panasonic, with the Coca-Cola bottlers. We've exited some already, for example, with Cargill. And I think we have been there to partner with multinationals coming into Malaysia in a traditional sense. What we are doing within our asset classes is to refresh and reinvest into the current areas that are suitable for us, either through tech or biotechnology, or even perhaps for us where we have visibility within the armed forces is actually the defense spending and technology expansion here in Malaysia. So what we have been doing is that whilst the redeployment into the public markets have been happening, that also provides an avenue for fixed income growth within the domestic market. Although with everything that's happening, there has been a painful tightening of the yields, but because we have a mandate to adjust our asset classes naturally, recovered capital will continue to flow into both fixed income as well as new equities.
Thank you, Ashraf. I'd like to, when the Prime Minister launched Gear Up, he said that by getting GLICs to heighten their focus on domestic investment, this deployed capital can benefit Malaysians equitably and birth new economic systems, i.e. raising the ceiling of Malaysia's economic stature while also raising the floor, economic inclusivity. I mean, open to the floor, of course. How do you see your investment commitments and your deployment of capital drive better wages, CSR, just to share with the audience?
Maybe I'll... Yeah, okay.
I was looking at you directly, Feisal.
I know. I saw that. That's my answer. Anyway.
Not that I've prepped him in any way, audience.
I think the answer to that is yes, because, you know, when we talk about companies and corporates, it's actually quite interesting, you know, because there's one point of time, it's all about profit maximization, right? And then if you remember, I think it was back in 2019, 100 over companies in New York, in US, said that wasn't the case anymore. So this is coming from the West, by the way, not from Gear Up. Okay, this is something from New York. In other words, we're in a situation here where it's actually quite different in what we're facing today. Now, I'm going to talk a bit about sustainability, and I guess more of the macro trends that we're seeing, right? First of all, when we talk about making money or making profits or doing sustainability, right? Sorry, I'm going to start again. Climate change. Now, climate change is actually a fundamental change. It will affect us, and we will have to fundamentally change how we behave going forward. Businesses will structurally have to pivot, to change, and relook at the businesses as they go forward. And the reason why is because it's about less emissions and therefore less resources. We will have to live in a world where there's so much less resources. And for you to do that, it's going to change, right? I mean, when you look at, just look in the UK or in other countries, you want to commute. People use public transport. In Malaysia, at RON 95 at 2 ringgit and 5 cents, everybody drives, right? And that's not going to be the case anymore. I think there will be a point in time where the sustainability or whether subsidy removal, whatever it may be, energy cost is going to be expensive, and we will have to change, right? We'll have to change. Now, of course, if costs of living, and a company would have a key component of input is actually energy. Another key component is wages, right? Now, as cost of living goes up, people will have to survive. And a living wage will actually have to go up as well. So what I'm saying here is that it's coming, because sustainability, like it or not, is inflationary. It's actually going to increase costs, right? And people will have to increase their living wages. What we have to do here is to ensure that we innovate and we are productive, and that comes from firms. The companies will have to be more productive going forward, and in order to do that, yes, we can do it by way of operational excellence, looking at how we do things, making sure that we squeeze how we work, but we do have to begin to adopt technology. So innovation technology will have to come in as well. So it's really sustainability and technology which will drive how companies will change their behavior going forward. So if you ask me, when we look at DDI investments, yes, we'll have to invest, we're going to have growth, but all of this is also moving towards we just have to make it more inclusive by definition, so to speak, as we bring in technology and we embrace sustainability, and we'll have to bring in the living wages up as well.
Kuop's tagline is teman persaraan anda, or your retirement companion. Last year, we started to have a program called Jelajah My Persara. Jelajah means going around, visiting, the pensioners around the country. So we started to do that last year. This year, we are visiting every single state. Some states, the bigger ones, will be twice, and really reach out, go to the ground, and really reach out to the pensioners, and really truly listen to what their problems are. I'll give you one example. We are now working very hard trying to conclude one, hopefully, initiative. Hopefully by this year end, we will be able to conclude. Trying to set up a retirement home. I know there are retirement homes out there, but guess what? It's not affordable for many of our pensioners. They're not affordable. 5,000 ringgit a month, sure, you can get a good retirement home. 8,000 ringgit, 20,000 ringgit. But it will not address the problem. So we need to solve the problems that are evident and they are being faced. And this problem will get even larger in the future because we are an aging population, right? So what we're trying to do is trying to figure out a way, trying to provide a retirement home. That means compared to where they are at right now, they are a step up when they move into. It's not an institution. I know there have been, what we are hearing is that please make sure that it's not institutionalized retirement home. That's not the intention. It must be a step up compared to where they are at currently. But how do I do that? With the cost of land being so high, cost of land typically half of the cost of building a retirement home. How do we build that? So we're coming up with a few possible solutions, business model. As we speak right now, my team is actually in Penang, trying to figure out the business model that we can work there. There are 3 states that we are, hopefully at least one of them will conclude by year end. So that's one issue. The other one that we saw, I personally saw when I went to the ground, was actually many of them, maybe about 40% when we send out surveys and whatever not, they said that they need help in terms of entrepreneurship. And that's how our involvement in Gear Up came about. What they need is just to supplement their income. Okay? What they need is just a small amount, really, really microfinancing kind of amount, for them to just supplement their income, to work from home, you know, SME, or not even SME, it's like really micro kind of need, just to assist the family to get by for the month. Okay? These are real problems. I mean, I think those in this room, maybe the ones of my generation and higher, maybe have gone through this, you know, in our past life. But maybe more than 2/3, particularly the ones behind, have not seen this before, you know. So used to the way that it's been there, right? We have all this tech. Yet the problems are real on the ground. So we are here trying to solve those particular problems. I can give you many more examples, but those are the 2.
Well, thanks, Nick.
For LTAT, we do come with a very strong social mandate, because our funds, in terms of the contributor numbers, are 95% the other ranks. These are people who go through a career in our forces as short of 12 years and a maximum of only 26. So you can imagine, for someone entering the service at the age of 18, they would exit at 30 or at a maximum of their mid-40s. And within their career, in terms of their earning capacity, the majority would remain within the B40 earning range. So sometimes I would like to describe us to other people as a B40 fund. But this is where I think when it comes to our investment mandate, we do take in a higher consideration of social responsibility to the contributors, since we are investing with their money. Hence why, yes, while we chase the earnings, but the consideration for sometimes what has been debated and discussed in terms of our over-concentration within certain specific companies and vehicles, as well as the sectors that we are in, those have been intended with sort of captive market that can offer additional benefits to our contributors outside of just the profitability that comes from it. But at the same time, like what was mentioned earlier, naturally investment hurdles are still investment hurdles. It's something that we cannot compromise in. Hence, the work to restructure the portfolio is a long one, but I think we've had quite a decent success in terms of what we've been able to turn around over the past 4 to 5 years. It's something that's ongoing, and we cannot afford to do so without letting go of the social mandate.
Thanks, Ashraf. As we go forward and we begin to deploy capital looking for opportunities, is there a coordination process so we don't trip over each other, so to speak, looking at similar assets? I mean, I know the verticals are quite defined. Is there a secretariat going forward? Will we have feedback on how it's working for yourselves?
No, not necessarily. I think how it will work out, so just to be clear, right, so just the fact that EPF has sort of taken the baton to lead investing in healthcare does not mean anyone else cannot invest in healthcare. I mean, all of it will do what we need to do to generate the returns based on our mandate. And we have 2 other GLICs who are not here today, and they will do the same, right? It's not like PNB is not going to invest in healthcare, or Tabung Haji. I think the way that we look at it is that from a knowledge standpoint, and as an example is on semiconductors, that each of us have taken a lead in terms of getting not just ourselves better, but everyone else better in the space. And we will invest sufficient resources to drive things like studies, market studies, commercial due diligence, and be able to share the findings from that. And then create sharing platforms, because investing is really about information, and the more information that you have, the better you become as investors. And also sharing of the mistakes that we make. And investing, the most important lessons are learning from the mistakes that you make. Right? There is no investment practice where you do not make mistakes. And therefore it's useful/efficient to have useful/efficient for each individual GLIC to take one or two to take the lead. Right, because then you can kind of get economies of scale, you kind of drive that, and whatever work we do surrounding healthcare and what we learn, we will from time to time create platforms of knowledge platforms to share with each other. And where there are investing opportunities, we will be both greedy and cooperative, like how the markets work all the time. Greedy in the sense that if the deal is not large enough, I'm going to take it off for myself. Cooperative in the sense that if the deal I can't fund everything, then I'm going to call my friends to say, hey, do you want to take a piece of this, right? And it happens amongst the GLICs, it happens amongst private equity firms, happens amongst the banks, and how things get funded. So that's how we think this should work.
Oh, thanks, Will. Makes perfect sense. I just thought I'd like to clarify it for the market. Now, it is an Invest Malaysia event, so I'm not going to ask for a market outlook. Well, maybe I will, actually. What's your thoughts? We'll start left to right or right to left, depending on the audience. Malaysia's a buy. Well, of course, I'm going to say that. I'm the CEO of the exchange. And it's a funny conversation because I was just in Singapore, and the conversation I had with the investors in Singapore was, last year when I asked you to buy, you didn't. You should have. 2020 hindsight's always a wonderful thing. That being said, looking forward, deployment, where do you see the market going as well?
So we're very positive about Malaysia, and we've been positive about Malaysia for since 2023 in particular. I think what changed at that point in time was, if you remember, a number of the government started settling down, a number of policies started being rolled out, the National Industrial Master Plan, NETA, digital, etc. And these plans have real meat in them. And what I personally like about the plans, if you look at the plans, is that these are plans that have baked in a lot of market principles into them. Right? And they are plans where if you are efficient, you should be able to invest for a reasonable amount of return. Right? And I think that's great. I think it reduces plans which kind of favor certain vested interests and applied market principles in terms of who gets what. So we like that a lot. The other thing that has happened is that on the fiscal side, and this is really important, that fiscal rationalization has happened. So the Fiscal Responsibility Act has been passed, the subsidy rationalization has happened, and we hope will continue to happen, and market is expecting that to happen. We have technocrats in very important positions in government today who take, again, market-based principles to looking at things. And we have a government in general that is reform-minded and wants to fix things and provide a better future for Malaysians. So these are all positive things that are happening. Then when you look at where the world is today, going back to an earlier point I made, we are really in an advantageous position to take advantage of dislocations. The world is dislocating and dislocated. And we are in a good place to take advantage of those dislocations if we know how to play our cards right. The geopolitical tension is resulting in people needing to diversify their manufacturing bases. Digital and we haven't spoken about AI yet, is going to result in a huge explosion of both demand for compute and demand for data to be moved around. And we're in a really good position to take advantage of that through our data center strategy as well. Renewable energy, again, the world is changing. The need for cleaner energy is very real. And clean energy today, luckily enough for us, in some instances, is cheaper than fossil fuel energy, right? And we have certain endowments in our country, a little bit of sunlight, a lot of hydro, that we can take advantage of to generate energy. There are certain issues that we need to solve in the sense that if we look at Southeast Asia, the places or the locations where we can generate cheap, clean energy is very far away from the demand for that energy, right? So supply is somewhere else, the demand, especially the industrial base, is somewhere else. How do we move these electrons from one place to another at a cost that makes sense for all parties? So, but these are problems to be solved. But I think we have a good handle on it, and therefore that's why we're quite bullish on the country.
So you're going to be allocating more to the Malaysian equity market?
Sorry?
You're allocating more to the Malaysian equity market?
We always run a very diversified portfolio for the benefit of all EPF members.
That's the answer. Feisal.
I am very, very bullish on Malaysia. And I'll explain why. I think, you know, when as a destination, of course, we compare ourselves with our neighbors, right? We all talked about whether it's US, Europe, emerging markets, and money flows everywhere. And of course, when you look at Southeast Asia as a destination, you do have to look at what's on offer. And I think this is where you have, I mean, I don't know whether some of you regularly come to Iskandar, Malaysia, but if you do look at it, it's actually quite different than it was before. Infrastructure, ports, roads, airports, a very legal system, security, political stability. It's got all the right ingredients and this golden opportunity when it comes to the macro trends. So that's actually something which is really, really going forward. Now, the other thing is as far as policy framework as well, and what we're doing here is we're ensuring that at least the investments are put in the right direction where we have that longer term sustainable growth. Now, from our perspective, and I talked about the technology or transforming firms, right? We also realize that we're way underinvested in terms of aviation connectivity. So that's one area that we're looking at in order to improve, make the country more competitive. Energy transition, reducing the carbon emission for energy, it's no longer a case about just about climate, but it's about the country's competitiveness. Having data centers is fine, but having it powered by a high content of renewable energy is actually even more advantageous, right? So that's something that we are investing. A lot of capital will be poured into that via Tenaga, via UEM, etc. And then, of course, when it comes to digital as well, trying to equip ourselves to be ready when it comes to infrastructure. You know, as Zul mentioned about the you know, the manufacturing for higher compute power or storage, and those are ingredients that we're investing in as well. So you have the fundamentals in place. Now, of course, you can have anecdotal evidence today, as we see, and I just want to make a point here. I was just speaking to Tan Sri Jeffrey over lunch, and he was saying that, you know, some of his launches here in Iskandar, it's like it's being snapped up. And Sufyan, our UM Sunrise here, I don't know whether he's here, he did Aspera Hills launch, and you don't get to see this often, but now you have people queuing up the night before, you know, the launch, looking for stuff. So again, you can see that hype as well. So again, I'm very, very bullish.
Umar, my background is public equity.
Yep.
And I think for those, some of us who were around in 1993, remember the bull run? How exciting that was? You know, what happened before the bull run took place? And then after that, we went through volatilities, and the last 10, 11 years rather been, you know, kind of that steady state. And you know what's good that's taking place right now here? So the short answer is actually similarly to my other two colleagues here. I'm very bullish, and actually I've been bullish since the end of last year. I think Cik Azlan, my head of equity, can attest to that, kind of putting how much our single largest exposure is domestic public equity, single largest exposure in terms of asset class. And we are benefiting from that, from the improvement in the rise in the stock market of late. Now, you know, when you talk about our problems, of course, capital, I mentioned that. I mean, we have ample capital onshore. And when the fact that one of our problems is brain drain, that means we do have talents. Except that we just better pay them well enough, pay them adequately so that they stay onshore. As simple as that. The fact that our talents are being well sought outside. So we do have talents here. So what we need to have is to make sure that as I said again, that's why we actually address the ecosystem. It needs to be from the ecosystem perspective for us to make sure that it is taking place. I think it's not just the property sales in Johor. KUAP owns 20% of Andaman Island. It's a JV with ENO. We launched three launches within 12 months, all fully sold. We just launched a few weeks ago, the fourth one. Now it's about 26% sold. So properties are being snapped up. There are signs that investors are looking, or the public, they have their demands, and we need to figure out what those demands are and meet those demands. So I think that's what our role is. And the other thing that's perhaps a bit different compared to, say, 20, 30 years ago, is that we actually collaborate a lot more nowadays. We talk to each other a lot more. There are a lot of co-investments that we do together with Khazanah, with PNB, with EPF, and so forth. So these are the different things that are taking place right now as we speak, that I think would ensure that this growth, the next leg of growth, will be sustainable. So I'm actually very bullish over the next few years. Thank you.
Thanks, Nick. Ashraf.
Well, my head of public markets had requested for me to use the term cautiously optimistic out of the fear that I would actually jinx the run that we're having this year. Since this is, in fact, our best TWRR over the past 5 years that I've been there. And certainly it's been a boon for us since our listed equities are all domestic. And it has allowed further deployment through capital recovered from real estate as well as private equity. So because of that, definitely on my own, I would feel that we have, as a country, put in all the required structural improvements, and we have good fundamentals, aided by macro events happening throughout the world that allows us to be better than where we have been post-COVID. So for us, LTAT, naturally, with Gear Up, it enables us to support and coordinate better among us GLICs from my perspective, in terms of providing the enablers towards the bigger goals that are being mandated to the likes of EPF, Khazanah, and also KUAP. For example, because our footprint is small, we would not play within the lower end of the PE, but what is being pursued and churned out from Khazanah and KUAP, we are in a position to sambut later on when these investments mature a little bit better. So overall, I think collectively, this is what we bring to the Malaysian economy, and it will only drive things better.
Thank you, Ashraf. Audrey's giving me the eye. We've run out of time, so Ashraf, Nick, Feisal, Zul, thank you for your time, your candor. I appreciate it, and yes, the market is a buy.
Thank you, Dato Umar. Thank you, dear panelists. Can I invite you to please step forward for a quick group photograph?